think if you look at various lead indicators, except a few of the high frequency indicators like cement and steel, in general, we are seeing some bit of slowdown, which of course also reflected in the IIP numbers. I think the banks, the narrative that came from the finance sector, especially one of the leading finance companies have said that MSME there has been some bit of a slowdown, and therefore there could be a possibility of delinquencies. So that's something which is, I think, is not uniform. I think each companies have got different narratives to give, but broadly, I think the people are a bit cautious, and there has been some bit of pressure in terms of lending growth. I think more than anything else, I think as the lending growth becomes very aggressive, then actually they will have enough earnings so that they'll be able to actually manage some of the other challenges that they may have. But I think the current narrative is coming from, I think, in the financial sectors. I think it's largely related to the lending growth being lower than what they could have otherwise done. But there are certain segments of the market that have done pretty well. I think if we take banking, have done pretty well because the cost of financing has come down. Thanks to Reserve Bank of India rate cut, definitely the cost of borrowing has been coming down, CASA rates have come down, and even for the borrowers' point of view, over is linked to the repo rate, the lending rates have come down. Even the MCLR is also down by about 50 basis points. I think we cannot come to a judgment on the basis of the one quarter numbers. I think we still have a long way to go. So therefore, this quarter, keeping in mind the overall current mode, I think banks also must be, or rather the companies also must be playing a little cautious and making a little higher provision so that they'll be able to manage things as we move forward in the next 2-3 quarters.
So Bala, where do you think that's going to finally settle in for the markets? Because like I started off, there is still that big question mark on what's going to happen with the tariff deal with the US. You've seen a little bit of a spike up in crude as well overnight, still pretty much in comfort levels. But do you think that's going to translate into a sedate market? Or do you think the early onset of festive season could perhaps resurrect that?
Yeah, of course. One, leave aside the earnings for the time being. The earnings is the one which I think keeping the market under check, and as well as what the tariff outcome would come. But if you leave aside that, clearly if you look at the direction for the next, say, 2-3 rest of the financial year, definitely the interest rate is going to remain favorable. And agriculture crop, they're not even the sowing, even the agriculture output that has come in the last 1.5 months have been pretty good. And I think the well spread monsoon spread across the country with water levels are pretty good. So the next, I think, 2-3 quarter visibility from the agriculture income going up quite significantly is also high. And the festival season, supported by the link growth coming back with the low interest rate regime, we'll see the rural economy to get kick-started with this improvement that is coming in. I think the festival season is early, but festival season is coming in. Therefore, we'll have to just see how it shapes us. My own belief is we will probably see some kind of good momentum coming back. We have not been seeing any slowdown in terms of government-led infrastructure spending. We are continuing seeing that momentum continuing. That's why cement sales and steel sales are up, mainly driven by government continued focus on infrastructure building. Therefore, I think the market is going through a consolidation phase. It's good to have market going through a consolidation phase. It's preparing, I would probably say, some bit of time value correction, which will also make the valuation become attractive. As the number starts coming a little better, we would probably see that again improvement coming back. I think the way US has settled for most of the countries, what they were expecting and what finally has come is more favorable for both the countries. I would presume India too will have similar fate. I would say, as you rightly said, we can't speculate on this. But given the fact that the way things are settling down with the rest of the countries, I would probably say even for India too, it'll become win-win kind of things. But definitely, I think the bit of slowdown that we are seeing, companies like TCS coming with the layoff, these are some of the things, a clear sign of nothing to the government. I think it's something to the disruption that comes in hits the world, especially in the technology world. And this also, to some extent, would make people a bit cautious.
All right. Hi, morning, Bala. This is Shrishti also joining in. But Bala, when you say that the agri income is expected to inch up going ahead, And along with that, we have already seen so many factors that could be at play. And some of the other FMCG companies are now also highlighting that, yes, the rural economy was doing well, but it's the urban economy that is now showing signs of improvement. What within the consumption basket can one really look at this point in time? Can it be autos? Can it be tractor sales? Can it be some of the staples or discretionary plays?
Largely, I would say it starts from the autos. I think we see two-wheelers have been doing well, but at the same time, it also has gone through the last few months of bit of marginal sales growth. But I think two-wheeler is the one which basically addresses the common man needs across the country, including the rural India and as well as urban. That we should see some kind of pickup. And second is the consumer spending, especially festival season. Generally, the household spending in terms of refurbishing as well as other household items to be bought, I think it also improves quite. Say the demand generally goes up. I think financing will also be made available for this segment of the market. Therefore, I would say even the consumer durables, we should see some kind of a pickup as a result of increased spending that could come in the coming festival season. But tractor, of course, we just saw some numbers. Tractors numbers are far better than what was expected. Almost about 6% registration growth that has come. This also, in some sense, I would say, good agriculture crop is also making people to spend on agriculture agriculture machineries, related machineries. Also, in some sense, it is reflecting on the growth momentum. Of course, they are another true indicator of the consumption because the true indicator will come from autos as well as consumer durables.
Okay, Bala, dialing up risk and taking a leap of faith did pay off. But looking at the market scenario, both global as well as domestic, we see a flux-like situation. A quick, brief answer. Kindly help our market participants draw their portfolio. A piece of advice, a golden advice, if you can just give while we let you go.
Yeah. So clearly, of course, the global uncertainty is largely not just driven by tariff now is coming to an end. I think the other stuff which will always remain from a global market point of view. See, one is the disruption of the technology world, and second is oil prices, which of course has been lying low, could also have its own impact. I think general slowdown that I think we are witnessing in the global market could probably keep it under check for some more time, given the fact nowhere in the world we can say the valuations are very cheap, and therefore we'll always have that holding back the investment decisions. But having said that, I would say there is a significant slowdown that being seen. The Fed governor would probably cut more aggressively than what you have done in the last few years, the last 6 months. No rate cut has come. I think US is the one which will not hesitate to cut the rate quite substantially to boost the overall sentiment and get back on the growth path. Therefore, next 3-4 months we'll have to just keep a close watch on how each of the moving parts will drive the sentiment.
Right. Okay, Bala, thank you so much for accommodating our interview request. Glad to speak with you as always.
Yeah.
Okay, let me now welcome on board Jitendra Goyal as well from Kotak Alternate Asset Managers and figure out what he's making and what is it that he would advise market participants. Jitendra, hi, morning. You just heard A. Bala from Aditya Birla. And he was talking about as to how there are a lot of uncertainties out there. Tread with caution a little bit. Right now is not the time to get a little risk with your portfolio. What is your own recommendation or advice about, what the market construct is looking like and how investors should behave?
Hey, hi, good morning, and thank you for inviting